Hey, it's Mark. So I recently published an article in Accounting Today. I'm not sure if you check out that publication. It's quite awesome. Lots of really helpful stuff in there. I published one recently that is basically tackles a big problem that we're seeing today and with accountants, and that is, how do you really boost your revenue during tax season where you're not just reactive, but you set up more proactive relationships. So I just want to kind of, cut to my screen here, and I want to just kind of review this article and kind of talk through it. And hopefully by the end of this, you can find a lot of value and incorporate this method into your practice. Okay, so let's check it out here. Okay, so how do you go from the once a year tax preparation client to the coveted evergreen recurring revenue relationship? How do you deal with clients that typically, send you their files at year end, you speak with once a year, and then that's essentially the end of it? In other words, how do you transition from the highly commoditized, lower value, reactive tax factory type of engagement to a more proactive relationship? So it's a simple strategy to, to really go upstream this year and convert most, if not all of your clients to an ongoing monthly engagement. Okay, so let's dive into a real world scenario on how it works. So take an example of a client, let's say a restaurant, for instance. That's unfortunately, quite a royal pain in the what. They just want to drop their stack of papers off on you at year's end and then put all the pressure on you to just, get it done. So let's say they're grossing about $800,000 a year, okay? And after expenses are paid for, salaries, rent, literally everything else on the proverbial menu, the owner makes $200,000 of that $800,000, okay? Now, next, they give you their P&L numbers, right? They give you access to their books. You file their individual, their corporate return. It's pretty much the end of relationship at that point. Because you simply collect this data, you complete the return, you present it to them, present them with their individual and corporate return, and finally you tell them, thank you very much. It was nice working with you. Talk to you again next year. I mean, I'm sure you say it a little nicer than that, but now if I had that same client and I'm working with, I don't see that as an authentic relationship, right? I'd rather them submit their data to me quarterly, maybe even monthly. I want to be able to access their QuickBooks data if they have it. If they don't, they need to get that to me. If I'm managing their books throughout the year, when it comes to November or December, I can advise them on things like, prepaying this, drawing that salary, taking this distribution, putting this into retirement, if applicable, completing the Section 179 for equipment. And after, all said and done, I have the ability to typically save a client around 15 to 20% of their income just by, just from the planning advisory alone. So it's pretty powerful stuff when you think of it all together. So now, armed with this new proactive approach, here's what I tell my client, and you can paraphrase and put this in your own words, but it boils down to something like this. Okay, so listen, we can keep doing it like this, but I'm not really adding any value here, and that's not how I like to practice. If you send me your information during the year, I'm going to be able to save you approximately this amount of money, which is significantly less than the fee I'm charging you. But I can't do it in this format where, you dump it on me. If the year is over, I'm pretty much useless. And this is not how I practice. So I like you to work with me quarterly, so it's going to save you more money. And this will unlock considerably more value, considerably new value for you, and the money is going into your pocket, and it's going to be going to your pocket in a much greater way. Okay, so what we're going to do is you're gonna go ahead and pay a monthly fee to me to work with you, because it's going to be easier as a monthly recurring payment that you can easily budget for. Okay, it's going to be $400 a month, but I'm expecting to save you around $30,000. It might be a bit more, a bit less, but far more than my fee. As it currently is, I can't really save you what I like to with the way we're working now. So if you work with me like this, if you can't, honestly, I can't really serve you like this anymore. More proactive approach would be a win-win for both of us. You'll have access to me throughout the year to help you uncover even more savings opportunities. Okay, so now what'll go through their mind at this point is, they'll say something like, "Oh, well, okay, well, I do want to save the money. Mark's not practicing like this anymore. This is the type of accounting firm I think I want with me like that anyway." So simply similar to that, but why wouldn't they say yes to that kind of situation that you're proposing? It's definitely more of a win-win, okay? And it's such a logical thing for you and them, but you have to be able to want it. You have to be able to believe that you're worth more to them in this capacity. You have to be able to believe you are worth it at the end of the day. So a lot of the friction comes from like what we call here at BookGel, self-limiting beliefs. We help you overcome a lot of that, but that's one of the biggest impediments that we see to transitioning to this kind of relationship. Okay, so here's where the big picture and the compounding effects come in when you kind of have this kind of way. So let's say one day you're selling your practice, right? And maybe you have 100, let's say 100 once a year, $1,500 tax customers, and I'm buying that book of business, right? So that's 150,000, right? I'll convert that into 450,000 within a year, and then I'll sell that later for $675,000 based on my metrics. So here's the truth. The truth is that you have this diamond in a rough piece of business that's just worth so much more for you. All you need to do is convert that into a smart way, when you're ready. But you have to set yourself up for that in the first place. You have to first believe that it's good for you. And then it's also good for the client. You have to have the confidence to know that this is the new approach that you're going to use to save the client money. Again, just having that win-win scenario. Assuming that you also do planning for your business clients, such as advising on deferrals or prepayments, things like that, then the conversion to this pricing model is fairly easy to digest. So now what about the clients that that decline this way of working with you? Well, you thank them for their business, and you have to have the courage to cut them loose, right? So if done properly, the boost in revenue from this new fee structure should more than make up for those what we call PITA clients, right? That frankly you'll be more than happy to really get off your plate. You want to weed out, you want to cull out those bad apples, those less profitable apples, and simply rinse and repeat using the same process going forward. So you're really making money during this time that they're with you, but you're also increasing the value of the practice. So one day, down the road, maybe you merge or sell your practice, but when that day comes, your practice is going to be so much more valuable. Okay. So it has this compounding effect and positive correlation to the valuation multiple that your firm can eventually sell at. So now the clients that you already have this kind of relationship with are more likely the type of clients that you enjoy working with the most, right? Now you can get more of them, work fewer hours, provide significantly more value. Not a bad way to, to get through busy season. Okay, well, that's it for today. If you found this video helpful, please like and subscribe to this channel for more tips and strategies that you can use in your profit playbook. Okay, and if you're ready to jumpstart this with your practice today, go to bookgel.com and schedule a call with me or someone on our team. All right, see you next time.